What has been the story for utilities over the past half year?
I think the biggest story for the utility space has been the peak in the interest rate rising cycle. And our speculation back in November was that we were nearing or at a peak in the interest rate cycle, and that really has come to fruition. What we've seen is a slowdown in the U.S. economy. Higher interest rates are having the intended effect, and that's bleeding into a slowdown in the inflation story, which is really what's most impactful for the interest rate markets and for utilities in particular as a defensive, yield-sensitive sector. We've been trading off that, and we've had some pretty good performance in the utility space. Now, the market is concentrating on what we've seen so far, which is a soft landing narrative, and that's generally a very good backdrop with an easing cycle for stocks, and utilities will benefit from that as well. Now, they may lag a little bit on the upward performance in a bull market, but you get the defensive characteristic when you're investing in utilities. So if the U.S. economy does slow down, we enter into more of a harder landing, which again is not our base case. You do have that defensive characteristic investing in utilities. So beyond the macro story, I think looking forward, there are a few other key themes that we're looking at, and the biggest of which would be the AI demand and AI power story.
Subscribe to Harvest ETFs Insights. Join us and stay informed.